guys, it's Stock Curry, and we've got the Fed meeting minutes coming out on Wednesday. We're going to talk about it, but we've also got to talk about a dire warning coming out of the FOREX markets. I'll explain what the heck FOREX is and why you need to know about it, so let's get into it! First up in today's market news, the bond market has flashed a recession warning once again. The 2-year and 10-year Treasury yields have inverted, and keep in mind that when that happens, a recession happens 100% of the time. Now, I do want to remind you that while the 2-year and 10-year Treasury yield inversion is an excellent indicator of an upcoming recession, it is a terrible indicator on timing. Meaning we have no idea when a recession will actually start. We just know that a recession will start sometime within usually 18 to 24 months of this indicator flashing. Now, that said, most economists think that the United States is already in a recession. And we'll get the official word on that on July 28th to find out whether or not we are in fact in a recession or not. Now let's get to the dire warning from the Forex markets. The euro slides to a 20-year low against the dollar. Okay, what the heck does that mean? Well, first of all, Forex stands for foreign currency exchange, which is usually just limited to Forex, the for, and exchange, X, Forex, foreign exchange. Now, what this is if you've ever traveled overseas, let's say you're going from the United States to Europe, you'll have to exchange your US dollars for euros in order to buy things in Europe. Then, when you go from Europe back to the United States, you have to change your euros back into US dollars. Well, when you do that, you do what's called a foreign currency exchange. You're exchanging your US dollars for euros, and then you're exchanging your euros for US dollars. Now, to go along with all of this, what determines the actual exchange rate? Generally, it's determined by Forex traders. Now, the foreign exchange rate is going to be determined by geopolitical factors, and usually it's determined by inflation and a recession risk. So if a currency gets devalued, it will get devalued because Forex traders are either expecting very high inflation or a very, very strong recession. So going back to the news, the euro slides to a 20-year low against the dollar as recession fears build. So in this particular case, Forex traders are fearful of a major recession in Europe. And more specifically, the euro has slid to a 20-year low against the dollar, meaning that Forex traders are expecting Europe to go through a recession that is going to be as bad as it was 20 years ago, or at least a recession that is worse than the US recession 20 years ago. Now, here's the big problem with that. The United States is already going through a recession. In fact, most likely we are already in a recession. But it's not just any recession. This isn't like a 2010 recession or 2008 recession. We're talking about a recession that really, what we're talking about here is stagflation, where we have the economy slowing down. At the same time, we have high inflation. We have not experienced a recession like that since the 1970s. So in the United States, it looks like we're going to go through the worst recession in over 50 years. Now, if Forex traders are expecting Europe to go through a recession that's 20 years worse than that, we're talking about a recession that's as bad as World War II or the Great Depression. Forex traders are expecting Europe to go through a recession that is as bad as the Great Depression. Why would they bet that? Well, a lot of it has to do with the war in Ukraine. Certainly, it's the worst invasion in Europe since World War II. And then on top of that, the energy crisis, especially with winter coming, and really the concern is that Europeans are going to be spending so much money on energy, gas and oil, that they're just not going to have any money to buy any goods. Now, Forex traders expect that this is going to be the worst recession in Europe since the Great Depression. But so what? Who cares? I mean, we're talking about the US market, right? Why do we care about what's happening in Europe? Well, here's why. Europe is the United States' largest trading partner. If Europe goes through a major recession, then Europe is not going to be able to buy goods from the United States. What that means is that the exports out of the United States are going to drop significantly. And if the exports out of the United States drop significantly, then that means that the US economy, or the GDP, also drops significantly. Meaning, not only does the US go through the worst recession in over 50 years, but now we get hit further by a recession in Europe, which makes the recession in the United States much worse as well. So, that means the United States might go through a recession that's as bad as the Great Depression. Now, personally, I think Forex traders are wrong. And I'm going to explain why I think they're wrong in just a minute here. But first, I want to get back to what's happening in the United States. Now, all of this talk about these major recessions is not good for the stock market. The S&P is down over 20%. The European stock index is down over 16%. The world index is down 18%. And Deutsche Bank thinks it's going to be even worse in the second half of the year. Now, part of the reason for that is that Americans right now are tapping into their savings in order to cope with high inflation. The problem is, once Americans run out of savings, they're not going to be able to buy things anymore. And that's when the deep recession is going to set in. Keep in mind that the Fed is already saying that Americans are almost completely out of savings. Now, that's all of the bad news. Recession, depression, fear, FUD, whatever you want to call it, it's terrible. But here's why I think all of those Forex traders are wrong. Oil has tumbled as much as 10% and closed below $100 a barrel. Oil prices are going down. This is the biggest reason why Forex traders think Europe is about to go through this major recession. But if oil prices come down, not only is that going to significantly lower the cost of inflation, it's also going to allow Europe to avoid a major recession come this winter. So because oil prices are coming down, because gas prices are coming down, because commodity prices across the board are coming down, I think inflation in the United States and Europe is going to fix itself. And I don't think Europe is going to go through this major doom and gloom scenario that Forex traders are predicting. I think Forex traders are wrong here. I think the fact that oil prices are coming down proves it. And I think Europe is going to be able to avoid this major recession. I think America is going to be able to avoid this major recession. It might still be the worst recession in 50 years, but I don't think it's going to be the Great Depression that Forex traders are predicting. I think they're wrong, and I think we're going to have a much milder recession than a lot of people are predicting, even though it's still going to be a bad recession, just not depression. So that's what I think is going on here. I think oil prices are going to save us. Now, all of that said, I want to talk about the Fed meeting minutes that are coming out on Wednesday because we've got to get prepared for those. Stock futures right now are little changed. I think everybody's just kind of waiting for these Fed meeting minutes to decide what they're going to do. I do want to let you know that the Fed meeting minutes are coming out at 2 p.m. Eastern Time on Wednesday, and that's going to be about 2 hours before the market closes. So I would not be surprised to see the market trade mostly flat up until 2 p.m. And then once those meeting minutes come out, man, I expect the market to absolutely skyrocket or tank, depending upon what those meeting minutes are. I have no idea what they're going to say, but whatever they come out, for sure, they're going to move the markets. That much we do know. And I would not be surprised to see a 2-3% move in the last 2 hours of trading. They could be that big. Now, they may end up being a big nothing burger. Who knows? But one thing for sure is that everybody is going to be waiting to see what these meeting minutes are. So just be prepared, expect a fairly flat day up until 2 p.m., and then expect major volatility at 2 p.m. or about 2 hours before the market closes. Now, personally, I haven't decided exactly what I'm going to trade yet, but I will let everybody in the VIP Discord know what I am buying or selling, or just sitting tight on when the actual meeting minutes come out. By the way, if you're not a VIP Discord member already, I want to let you know we're absolutely killing it over there. One person today made a 225% profit on a call option in just 25 minutes. This was a killer day trade here. And Manny is up 173% over the past year. Manny made over $100,000 in the last 12 months just following my market updates and trades. Manny pulled out quite a bit of money to buy their first home. That's absolutely incredible. Congratulations, Manny. Now, if you're not yet a VIP Discord member and you want to join us, I cannot guarantee that you're going to make $100,000 over the next 12 months. What I can guarantee is that you will learn about options trading, technical analysis, fundamental analysis, all of the tools that Manny and myself use to make a lot of money in the stock market. I will give you the full training courses that I've recorded. We'll give you coaching to help you along. It's both myself and other coaches who will help you get there. And you can make a lot of money in the VIP Discord. I can't guarantee how much, but I can let you know that almost every single person who joins that VIP Discord makes money with us. If you want to join the VIP Discord so that you can start making money with us, you can sign up at stockcurry.vip/getvip. That's stockcurry.vip/getvip. Now, I do want to let you know that currently the VIP is at a discount of only $20 a month. However, that discount was limited to the first 1,000 people, and I've already had 883 people sign up. I only have 117 slots left. Now, I know 117 sounds like a lot, but you've got to understand there's 5,000 to 10,000 people who watch every single video. And with 5,000 to 10,000 people who watch every single video, those 117 slots are going to be filled within the next couple of days. So if you want to get in at $20 a month, you're going to have to sign up in the next day or two, because after that, the price is going to rise up to a higher rate. And then it's just going to keep going up from there. All right, I hope you enjoyed this video and got a lot out of it. Don't forget to hit the like button and subscribe. And if you're on YouTube, go ahead and click the bell icon and click all so that you can get notified when I release my next video. I hope you have a lot of success trading, and I will see you tomorrow.